All right, we'll get started. Hello and welcome to today's Ample Geyser discussion and FAQ. We're excited right now because there's a big period of growth, as I'm sure you've all noticed, and this all stems from the community. So as a team, we felt like having a community call would be a really great thing to do. We've had a lot of FAQs come in and we've had some other issues to address. And as a result, we wanted to have a call to help address some of those things. So I'll run through the agenda for today, and then I'll let the team take over from there. So today's agenda will be Evan, Brandon, and the engineering team will introduce themselves. We'll give a brief overview of what amples are. There's a lot of new community members joining every day, so this will be really helpful, especially because we'll be recording this. Then we'll dive into one of the more exciting releases that we've had recently, the Geyser. The engineering team can discuss what that is, some of the drivers behind its success, and what the plans are and why we launched it to begin with. Then we'll kind of dig into those FAQs. And we'll open up the floor to questions from the community at the end. Hopefully we'll get a couple good ones in. If you have a question, you can DM me here on Zoom or on Telegram, and we'll sort through those and we'll get a few of those ready. And when it's your time to answer, I'll ping you back and I'll also unmute you so you can ask the question. So thank you very much for joining. It's a really exciting time. I'll hand it over to Evan so he can introduce himself and the team. Thanks.
Hey guys, thank you so much for showing up for this call. We're super excited. My name's Evan. I'm one of the co-founders of Ampleforth. Been there from the beginning along with Brandon, and we're excited to kind of just give you the quick overview of what Ample is actually about and then talk about the Geyser. We'll answer a few questions that we see popping up in the Telegram channel and hopefully get everybody excited about what's coming next. I think Brandon's still muted.
Oh, let me fix that. Nitin and Ahmed, if you guys want to intro yourselves.
Sure. Hey, I'm Nitin. Like I graduated like USC 2018-ish, and then the crypto world was kind of booming. So that's when I entered the job market. I was kind of looking around, and then I found these guys, and pretty much been working at Fragments, as we were called then, and now Ampleforth.
It's a funny thing about Nitin. When he finished his interview, Brandon and I were super impressed, first of all, with his performance. But then Nitin, I don't know if you remember this, you sent us this email thanking us and saying that you were going to accept the job. And you quoted, I guess, the one philosophical statement from SICP. And I feel like that's when like me and Brandon were like, yeah, we made the right call.
Yeah, I still have it on my Twitter.
Yeah.
Wait, do you want to go next?
Brandon, go ahead until I figure out my camera.
I'm Brandon, other co-founder, I guess, engineer. Started with Evan.
Yeah. I forgot to say that I'm head of growth at Ampleforth, not just a cruising moderator.
Hey, I'm Ahmed. I'm one of the engineers. The way I got into Ampleforth is that Brandon and I worked at Google Search a while ago, and then I joined Ampleforth later, like a couple of months after it was founded.
Great. Yeah, if you want to jump into the overview of what Amples is, because there's a lot of new folks showing up every day. It'd be good if you explain that, Evan.
Yeah, totally. Yeah, for those of you who are just totally new, Ample is a cryptocurrency, kind of like Bitcoin, except for it has this automatic supply policy. So there's a price target. It's targeted to the purchasing power of the 2019 CPI adjusted dollar. And when price is trading above $1, like it is today, what happens is every day we will increase supply proportionally to all balances. And conversely, when price is trading underneath $1, we will contract supply from all balances. And the purpose of this really is, it's multifold. So in our early research, when we were thinking about Ample, we kind of just came to the conclusion that, well, the Bitcoin protocol was designed to counteract a sovereign monopoly, and they went to extreme lengths to do so. And as a result, it became pretty clear that the most salient application of decentralized technology was the creation of new monies. And then we kind of just went on this journey of trying to figure out, okay, well, we can create these new monies. What qualities would make for a better money, right? So Bitcoin succeeded in articulating scarcity in a purely digital context. How could we take that to the next level? You know, what sort of collateral asset would have been better suited than gold, for example, at the end of Bretton Woods? And anyways, this unique supply policy gives rise to a number of beneficial properties. The first is, because it has a price target, it knows when there's more demand than supply. And it also knows when there's more supply than demand. And because we offset that by automatically increasing and decreasing supply, this has, you know, the ability to prevent liquidity crises from occurring. Like, for example, you saw on Black Thursday with Maker, everybody needed DAI to close out their positions. And that was kind of weird because people also needed DAI to kind of retreat from the downward pressure of the network in general. So you ended up in a situation where at a time when there needed to be a lot more DAI supply, there was an incentive to buy DAI so that you could close it out and reduce the supply of DAI. So we have a really kind of tight coupling between supply and demand. When the demand for Ample is high, we create more Ample, or actually the protocol automatically creates more Ample. And when demand is low, it automatically destroys Ample. The other property that's interesting about this is it introduces a different set of incentives. So if you've been hanging around the Telegram channel for a while, you probably realize that one of the things that people get excited about is these supply changes, right? So every single day, there are folks hanging around the hoop, wondering what's going to happen after, you know, supplies increased. This actually has a fundamental effect on trading behavior because now you have to look at both price and supply as a proxy for gains and losses. You can't just look at, you know, simple move, it's going up or it's going down. And that gives rise to a unique movement pattern that can decouple from Bitcoin, which is interesting for another reason that's related to collateral assets. Like right now, we're kind of in this space where a lot of the digital assets that have been created are hyper-correlated. They're all kind of following Bitcoin's technicals and fundamentals. And that makes it very difficult to diversify. It makes it very difficult to reduce risk by constructing baskets. And so when we have this kind of DeFi ecosystem that's highly composable, imagine it's like f of g of x, right? Where x is the input and let's just say y is the output. Right now, all the x inputs are very similar. So it's almost like you have one x. So you can only create so many types of y. Ample is different. As a result, you kind of add to the input set, which means you can compose more interesting output sets. And lastly, because we do have this price target, it can be used eventually for denomination, which would be a really big deal. So right now we already see things like contract denomination happening in crypto. And that's very dangerous to do with floating price assets. But in the even longer run, you can imagine cryptocurrencies being used for denominating goods and services. And that would be a really, really big win for the space at large, because that would give rise to price and wage stickiness, what economists call nominal rigidity. In fact, I think that if Bitcoin had been designed the way Ample is designed, we would already be using it as a unit of account. And so those are kind of the fundamentals. It's a coin, it's not a bank, there's no balance sheet of assets and liabilities. It's like Bitcoin, except for supply changes daily, and that allows it to be used for diversification as a unit of account and to prevent liquidity crises. All of these make for a really, really good DeFi building block.
Awesome, appreciate that. So that's a quick overview of Ample. I think what we can do from here is jump into the Geyser, because obviously we've developed the Ample piece, but we've had this recent release, which Brandon and engineering team can talk about.
Yeah, definitely. Yeah, I think there's a lot of interest in the Geyser in general. It's probably why a lot of people are here on this call right now. We launched it about 2 weeks ago, I think. 2 weeks ago, maybe a little bit more. And it's been very successful so far. We've gotten a lot more traction than we were expecting. We've managed to hit all of the targets we were hoping for, which is really amazing to see. And I think we also need to call out the community here, because this is definitely...
Whoa.
What's going on behind me? Definitely a community-driven endeavor too, right? So I think that's awesome to see. You know, the sort of broad uptake and distribution. So yeah, the main goals of the Geyser from the highest level perspective, San Francisco is crazy sometimes, is the goal with the Geyser is to distribute tokens from the ecosystem fund in a way that's, as sensible as possible, for some definition of sensible, right? And we want to do so in a way that helps the overall health of the economy, health of the ecosystem as much as possible. And so the way we think about this is we can distribute tokens to people who take an active part in providing liquidity, which is one of the most important metrics for a money-like asset, which Ample is, right? So the more liquidity we have, the more efficient it is, more efficient all the marketplace around it is. And so the Geyser's goal is very simply to be a distribution mechanism to as many different people as possible with open participation and rules-based in a way that helps liquidity. So we launched a 3-month pilot program. We're starting off with just 3 months to target the ETH Ample pool on Uniswap v2. In the time since we launched, we have become the largest pool on Uniswap v2 by liquidity, which has been amazing. We have, over, I don't have the stats here with me, but over $6 million of liquidity, I think, on Uniswap v2, which is all on chain as well, which is great. So it supports the sort of decentralized ecosystem, which also has the same open access properties that we're hoping for. So real quick, the way it works is users and the Geyser first deposit liquidity into Uniswap. So you need equal amounts of ETH and Ample to do so. In return, you get Uniswap liquidity tokens. You take those liquidity tokens and then you deposit it into the Geyser, which is a separate standalone application. And then the Geyser has a sort of reward system for liquidity providers. So the more liquidity you provide and deposit into the Geyser, the greater share you get of this constant drip of Amples from the Geyser as it unlocks. And that's pretty much it. There, you can log into the Geyser and see all the stats there, of the overall system. And it's just a very simple smart contract deployed on chain. There's no knobs for us to tweak. It's just there running sort of as a clock, so to speak. Yeah, so I think that's it for a high level. I think there's a lot of questions later on about the details about how rebase interacts with the Geyser and Uniswap. I think I'll save those for later.
Yeah, sounds good. Yeah, thanks for the overview, just level setting everybody on Amples and the Geyser. The community's been fantastic on this and this growth, and we appreciate everything everyone's done because this is a completely community-driven initiative, the Geyser. So what we'll do now, because there's been so many questions, is actually get into those frequently asked questions that we see, and there's been some great ones coming through in the chat. So we'll jump right into the questions, and engineering team can just answer these. I'll just rattle off the FAQs. So the first question was, is the rebase always at the same time, and can anyone execute the rebase? Nitin or Ahmed probably can handle that one. Ahmed seems to be on mute.
Oh, both Ahmed and Nitin are on mute.
Is on
Yeah.
Okay.
Go for it.
I can answer that real quick. Just keep things rolling.
Okay. Can you hear me now?
Yep.
Yeah.
Okay. Great. Yeah. So, yeah, the rebase is every day at 2 a.m. UTC, which is like 7 p.m. Pacific time. Sorry, Simon, what was the second part of that question?
It was, is it every day at the same time? And then can anyone execute the rebase?
Yes. So the rebase transaction is a public function. So anyone can, on the technical side, can call the function, or on the less technical side, we have a rebase button on the dashboard. So anyone can execute it, but also nowhere is if like there is no way that if no one clicks the button, the rebase is not going to happen. It's still going to be triggered at some point if no one clicks the button.
Nice. Did you have a continuance to that other component from earlier, Ahmed? that you slacked me about?
Oh yeah, sure. So I guess I was keeping that for one of the later questions.
That you can do that too. Jump into the next one
yeah,
if you want.
okay.
Yeah.
Sure.
Also, we have some contingencies in place, like if, like in terms of how the rebase gets called. So first, when we enter the window, Chainlink tries to call rebase, and then if they don't do it in the first 2 minutes, then we try to call it. And then within 7 minutes, if no one calls it, then we have like alerts on our phones, and then one of us actually goes and manually calls it. So yeah, this process has kind of worked for the entire year. So we've, touch wood, we've not missed a rebase till now. Hopefully, continue.
Yeah, I don't think we've ever had to manually intervene anyway, right? It's just sort of like clockwork at this point. And it's open access again too. So like I think we've seen the last few rebases, there's almost been a competition of who can click the button fastest and have it go through. Every day around 7 o'clock, we see a whole bunch of attempts to call rebase from all you guys, which is awesome.
Definitely. Because we've had such a growth in community, there's been a lot of technical people who joined in, but then there's folks that are actually just playing with dApps for the first time. So some of these questions are really helpful for them. One of those questions is, how long does it take for a change to show in the wallet? And I'm assuming that this is post rebase. Sometimes people struggle to understand what happened to their wallet balance, and they may have one expectation and not be able to see it.
I can take it. So everyone's wallet's balances would be updated instantaneously just after rebase because it's an atomic operation. Some wallets, like third-party wallets, kind of cache your balances, and that's why you see that some people see that the balances don't update. Even sometimes on Etherscan also, I think there's like a small cache, maybe like a minute or so. So it's mostly because of caching that you don't see the balances change, but in actuality on the blockchain, they change instantaneously.
Nice. Somewhat related to that, and maybe I'll ask this one to Evan. It's actually awesome getting to work with Evan because he's hyper talented across many different domains, and he's a good dev as well. So let's make sure you get this one. Essentially, does the rebase work if your coins are on KuCoin?
Yeah. So in the case, so I guess the Ample is first and foremost an on-chain asset. So it happens pretty much automatically on chain because the manner in which we adjust supply is by increasing this kind of global scalar variable that applies all across the board. It's kind of analogous to, imagine you have this gravitational constant that, maintains like how much attraction there is between planets. We increase the constant, all the planets get closer, we decrease it and they all get, farther apart. It's not as though, we're buying back tokens and then airdropping them to people or issuing them in some kind of bank and then sending them. It's just this scalar variable that's being adjusted one time a day. That's what's happening when you guys are pressing the rebase button. But in the case of a centralized exchange, there is a technical integration and for that reason, not every centralized exchange is going to be able to support amples if they just did it, for example, randomly. Like there's some Chinese exchanges like Biloxi, MXC that tried to list us. They didn't do a technical integration. We kind of flagged that.
Just a quick correction here. It's not like no one. It's not like not everybody can do it. Everybody can do it, but there is some process that's different from any typical ERC token. We are going to have a simple integration guide to roll out on our website. It should make it so easy for exchanges to do the integration and list this.
Yeah, that's right. So. Yeah, I mean, so with an exchange, really, they pool wallets, right? So they have these wallets that hold and in custody your amples or their customers' amples, and supply adjustments will propagate into those wallets. And then it's the exchange's job to then propagate those changes in supply to individual accounts. And as a result, that calls for a technical integration that is very doable, but they have to know about it. And most likely they should be reading these integration guides. So in the case of KuCoin, they have a proper integration that's been vetted by the team. Same as the case with Bitfinex. Those are approved centralized exchange trading partners. And in both of those cases, the supply adjustments will occur there too.
Great. This next one's for Brandon. there's some confusion. If you just generally address the confusion around how Geyser, Uniswap, and the rebase works, if you give a walkthrough of that and some considerations.
Yeah, so I think this is actually an interesting question. There's two systems involved, well, three, I guess, if we consider the protocol, then Uniswap, and then Geyser. Each of these systems individually is very straightforward. You could write down how they work very, very simply, but the way they interact with is really interesting to sort of pick apart. Okay, so first of all, I'll just take it for given that people understand the rebase, how it operates the way Evan described earlier. Uniswap, the Uniswap pools operates the same way with Ample as it does for any other token, right? So there's nothing special going on, except the rebase does add one little wrinkle in the sense that when the supply changes, it adjusts the size of the pools within Uniswap, which adjusts the quoted price for people who are doing swaps, right? I'm going to take it for given that people understand Uniswap because it take too long to go off in the weeds there. But yeah, the quick rundown there is when rebase happens, it adjusts the Ample side of the pool, which moves the quoted price back closer to the price target, unless the market moves it back in one direction or the other. And then, you know, as a liquidity provider, you provide, you know, both Amples and ETH into this pool, and you get a cut of the trading fees of the users who trade ETH to Ample and back and forth. And then, you know, there's this concept called impermanent loss that I've seen a lot of people talk about in the chat recently. And this is just a property of every single, you know, constant product market, which is, you know, Uniswap and Uniswap-like platforms. Anytime there is a deviation between the overall value of one pool with respect to the other, as a liquidity provider, you are exposed to some amount of what's called impermanent loss until they get back in line with the point at which you put in liquidity, right? So ideally over time, trades happen and the trading fees go into the pool, so the pools just constantly grow in value in aggregate. And then impermanent loss happens as these price deviations go away from each other and then back to each other. So with Ample, because the supply changes, you have to look at the overall value of the pool, not just the price. So I think that's just the little key insight there. And then impermanent loss is the same as immutable. There's nothing different. And if you look at the history of the pool so far, we've had a lot of trading activity. And there are tools out there like pools.fyi and that sort of thing that we've worked with, and those show, you know, accurate statistics because they keep up to date with the accounting as the rebases happen. So there are lots of pools that can show you the current breakdown of, you know, ETH and Ample that your liquidity tokens represent. So I highly recommend going there. Also, the Zapperfy is another great resource that also plugs directly into the Geyser. So if you contribute to the Geyser, then it can also show you the underlying ETH and Ample. Cool, and then the Geyser just sits on top of that. And Geyser is a completely separate application. It doesn't change the profit and loss of supplying to Uniswap. All it does is add Ample distribution on top, right? So if you're already supplying to Uniswap, it seems like a no-brainer to also put it into the Geyser, as long as you're okay with the relative, you know, technical risk of adding another system on top of the stack that you're working with. If you are concerned about security, we publish security audits from Certica, so you can look at those. And of course, the source code is open source as well. Yeah, so in terms of impermanent loss, I think overall the pool has been very profitable because we've seen so much activity. So if you look at the pool compared to others, it's not something I'm worried about at all. If you are already holding ETH, I think it's a no-brainer to match that ETH with the Ample and put it into the pool. But of course, I'm not in a position to give investment advice, so do your own diligence, of course. But that's sort of the way I think about it.
Yeah, thanks, Brandon. Somewhat related, we get a lot of questions because of the Geyser's reward system. And this question is for Nitin. Why and how does the total reward pool change?
So the total, so we started off with a 75,000 Ample reward. And then the reward pool kind of changes up and down with rebases. So because we've been having an expansion, the reward pool has actually around 3x. So yeah, and over time, the reward pool kind of gradually drips out into an unlock pool from where like people can claim rewards. So that happens on a linear fashion over a period of 90 days. So the reward pool kind of goes up and down with rebases and then goes down over time.
Great. There's another technical question when people are checking these things. It says, why doesn't it show anything under the amount to withdraw?
If you have deposited something, it would kind of show up in the amount to withdraw. Like if you don't deposit anything, it's not going to show.
Got it. On that front, actually, you guys should always feel like you can come into the Telegram and chat with us. We're all
one thing to add, if it's just like deposited for a few minutes or hours and you don't have any rewards yet, so you do not have something to withdraw.
That makes sense. Yep. Yeah, and also if you really get stuck, that's actually kind of a thread. We're sort of through those basic Geyser item questions and like the troubleshoot piece. But if you're really stuck, even these answers don't get you there, feel free to jump in the Telegram. You'll probably be able to get to a community member knows what's going on or somebody on the team.
Yeah, I'm hoping to be able to spend more time in Telegram. These past few weeks, the team has been slammed, as you can imagine, and you guys are like super prolific. There's been so much activity in the channels that it's impossible for me to keep up with it. So I'm going to hopefully try and do that more in the future.
Hashtag Ampleforth.
Ampleforth.
I love it. Okay, so actually, Brandon, probably the most asked question: what are the future plans for the Geyser?
Yeah, cool. Yeah, so the Geyser we initially launched as the initial program for the Geyser was a 3-month program with a certain amount of tokens that we set aside to unlock, over that period. But we view the Geyser as a long-term piece of the ecosystem, right? So the way I think about it is we've shied away from like yield farming and that sort of thing. When we first started trying to gain some excitement around this program, we explicitly stayed away from the yield farming communities as much as possible because our primary concern is just the long-term health of the ecosystem. So we went first to the core community members, people who already had an appreciation for the project and wanted to see it succeed, right? And so that's still our primary concern. And so we view this as a piece for the long term. I think the easiest metaphor is to compare this to Bitcoin's proof of work system, right? So that's sort of Bitcoin's method of distribution in the sense that, in the beginning, the idea was that anyone could spin up a node on their computer and partake in the network and then get some Coinbase rewards. So we're not a layer 1 blockchain, at least not right now. We are instead just a monetary asset on top of systems. And the best way people can contribute to it is by providing liquidity. And so we give liquidity mining distributions to people who do that. So this is not a 3-month thing where we just do this as a stunt to get a lot of people to pay attention to us. This is something that we take seriously over years and potentially longer. So right, the 3-month period is relatively short because it gives us a chance to see how people react to it, right? So we can look at, what kind of, downstream effects this has on liquidity usage and that sort of thing. And then also the DeFi space moves really fast. And so we didn't want to create a years-long program that got tied to a downstream platform that got, obsoleted, a month later. Right? So that's why we went with this shorter period in the beginning to sort of give us the ability to be agile and move as we and the project needed and also the community wanted to. And especially right now in the AMM space, there's a lot of really interesting innovation going on. So yeah, the short answer, the Geyser is going to continue for the foreseeable future. we have not really decided what the downstream platform will be at the end of this 3 month, but we do know that we want to start the next program before this one ends, so that there's no downtimes or weird interactions with the marketplace. So yeah, I think there's a lot of really interesting stuff going on with Balancer and with Bancor V2 as well. I think there's also some really neat technical innovation opportunity specific to the Ample project itself that could remove impermanent loss from the equation, even without relying on any sort of Oracle system, the way some of these platforms do. So yeah, it's something that we're looking very closely at. And hopefully we can share something soon. But yeah, the Geyser is going to continue to operate exactly as it does now. And it's going to, the next version is going to start before this one ends, so that there's no rapid cutoff.
Nice. Yeah, actually to point to that and point to some of the thoughtfulness of this in one document that you guys can read up on. A year ago, Brandon wrote a Uniswap Ampleforth kind of magical piece that touches on a little bit of some of the performance items that Brandon chatted about earlier when it came to some of those technical questions. And then when it comes to the Geyser and the long-term view that Ample took with it, you can look back for the RFC, which was launched months ago, the Certica audits, the Nexus Mutual insurance, and a few other things, which are all, if you think about how we've thought about this, there's a nice breadcrumb trail for anyone who wants to follow it. So this question's for Ahmed. Some people ask, what's the effect of pulling out and restaking? Do you get new rewards with a new rate?
So the main idea of the Geyser of how much get allocated as rewards for every person is based on the time multiplied by the amount you have put in. So if you, when you withdraw, that is based on what is in the unlocked rewards, which now, since we're like 20 days in, or like something like that, 15 days in or something, that's going to be the unlocked rewards only for the 15 days of the 3 months. And then you have the amount of time you have staked it for. So that's what it's based on. So if you unstake it and then stake it again, now your timer is starting from 0. So for the later distributions of like the 2 remaining months, you're gonna have a smaller allocation because you removed it and you added again and your timer got reset. So I guess the short answer is, if you're planning to stake it again, then do not unstake it, because you're leaving a lot on the table in terms of your second shares when there are more tokens unlocked.
Cool, thanks for feeling that one. So one of the cool features you might see on the dashboard, or you can get to, is a correlation map. So does the correlation heat map take into account only price of amples or also supply? And Nitin, you were instrumental with the correlation map. Can you talk about that one?
Yeah. So we have this thing called supply adjusted price, or it's also like market cap, basically. So I think if you want to compare apples with any other crypto asset, like a fixed supply asset, you need to account for the supply changes. That's kind of a problem we are facing with a lot of these aggregator services as well, because we are kind of this peculiar asset where the supply changes and every other crypto asset does not have this. And then for them to accurately show our market cap is very tough because yeah, they might also need to do some changes on that. And so that's why we have the market cap chart on the dashboard, and also like the correlation page, which kind of lets you compare, lets you make an apples to apples comparison between Ampleforth and some of the other cryptocurrencies.
Thanks. You know, what I'm seeing is some questions that are popping up in the chat are also sort of FAQs. There was a question about, I'll just ask it from the perspective of the user here. They said, are there any consideration being made to leave Ethereum or build an independent Ample chain connected with something like Polkadot? That's something we hear a lot, and was in the FAQs as well.
Yeah, happy to tackle that one. So from the very beginning of this project, we always viewed Ample as being not tied to any particular layer one platform. Right? So we made a decision very early to not build our own blockchain. Instead of creating our own silo, then asking everyone to come to us, we thought we'd instead rather be on top of the platform where everyone else already is, whether that's storing value, sending transactions, or building applications. And so we decided to deploy onto Ethereum, which was the dominant platform and the most decentralized, and I think is still sort of holding that crown. So yeah, we're big fans of Ethereum, but we wrote our first blog post about how Ample could exist on multiple chains about a year and a half ago, I think. So it's something that we've thought about for a long time. The way that would work is, remember there are a few core modules of the system. There's the Oracle, and then the supply policy, and then the token. Right? So the oracles and the supply policy only need to exist in one location, ideally on the chain with the most level of decentralization. And then a token that holds your balances, and that's what you interact with when you send Ample to your friends. That would be deployed onto every target chain. So as long as the rebase from the supply policy can be sent to the tokens on the other chains, and as long as you can share liquidity, so send Amples from one chain to the other, then it's essentially the same currency, even though it's on different layer ones. So yeah, that's still our plan and our vision, the long-term vision for how Ample sort of evolves through time. I think that space is also developing quickly too. I think most of the exciting activity is going on in the Polkadot world and also with Cosmos. So I think those are the most likely first ecosystems that we start to dip our toes into. And then that could also include an Ample dedicated chain as well, right? So there's nothing stopping us from creating an Ample chain if there is a good reason to, but it's not something we're looking to do necessarily.
Yeah, let me just chime in real quick on that. I will say one of the reasons why we always kind of viewed Ample as chain agnostic is, as Brandon said, because we want to be everywhere the customers, not like requiring everybody to come to us, but also kind of in an exploration in monetary economics. It really isn't the case that typically like gold doesn't belong to a single mine. It's kind of this natural property that you can mine from any number of places, and really these kind of economists have tended to view money through the lens of scarcity and use value or lack of use value. And in the case of Ample, as long as the scarcity profile is preserved across any number of chains, it's still Ample, because there is no use value. It's like fiat, right? You can't eat it. And that's one of the advantages of being chain agnostic. Also is potentially more robust in the long run and less vulnerable to attacks if it's on multiple chains. So I think, yeah, we're excited. There's some stuff we can't talk about and there's stuff that we can talk about, but we're excited still about that multi-chain vision that Brandon wrote about a year and a half ago.
Awesome. So actually we've got one more question in the FAQs, and then we've got a few minutes to actually open it up to the rest of the community. And I've seen questions flow through. I'll just unmute you. If you're able to ask the question, go for it. If not, I'll just move to the next question. So let's answer this next question. But if you asked a question, just be ready to be unmuted here. So the next question had to do with, have you done any simulations about what would be needed for the peg to become more stable in the long term? Could you address that, Brandon?
Simulations around what would cause the peg to become stable in the long term. We have been working on in-depth simulations with an outside partner who's deep in the space and well respected. It's not ready to publish yet, but we're getting really, really close. So I'm really excited to get to the point where we can share that with the world. And that includes, some answers to this question. So the answer is, yeah, sit tight. I think there's going to be a lot for people to pour through very soon.
Awesome. Okay, so now we'll jump in here. If folks if they're not ready to be unmuted for whatever reason, I will just go ahead and ask it for them. So the first question is from Menduli. Not seeing them. Here we go.
Hey, hi guys. Nice to see you and hear from you live. And thanks for sorting this out. I just wanted to ask, while we have similar projects like the Ample one, I just quoted on my question the reserve protocol, there's now, or even the less known money on chain. Sorry, what are the difference from Ample protocol towards these other similar projects? I already noticed it's much simpler, which is a good thing. But
yeah, I can take this.
Difference?
Yeah, there are a number of major differences, but the most distinguishing characteristic is that Ample is not a bank. So if you think about stablecoins, for example, that are collateralized, they have a set of assets and liabilities, and they accept withdrawals, and sometimes they're redeemable. Right? They accept deposits as well. The Ample is actually not a bank, and it's not a stablecoin. Right? So the Ample doesn't maintain, it has no notion of credit. There's no notion of what's owed to me or what I owe to others. It only maintains the quantity of Ample that you have and allows you to transfer from one peer to the other, much like Bitcoin is not a bank. So this is something that I think that in general would be helpful for the space to know. Two things: there's a difference between equities and commodities, right? We kind of sorted through that in that whole 2016 revolution. But another thing that I think is important for people to understand is like, there are these things called base monies and there are things called banks. So typically banks are, these eventually collateralized by base monies, which are collateralized by nothing. So like gold is not collateralized by anything, right? Fiat is not collateralized by anything. Those are like base primitive monies. And Ample is similar in that it is a base money. It doesn't maintain a balance sheet at all. And that's why it can be used as a collateral asset in other banks. And it's kind of designed to be optimally suited for that. But the other thing about Ample is, and this might be something that is not clear enough, but we can continue to repeat it, that its agenda is actually not to be stable in the near term. So like I said, one of the things that is really special about Bitcoin is its lack of connection to traditional assets. It introduces a new randomness to the ecosystem that's disconnected from the traditional cycles of consumption and production. So you can kind of see the current environment, for example, right? There's a lot of money sitting in money markets. The stock market is where it is. People complain that it has started to decouple from the economy. There's a lot of people itching to buy because that's like the only move you can make, right? You can't sell when your money's in money markets. The only move to make is to buy, but there's no yield, right? And the reason why there's no yield is because we're all connected to this one really large boom and bust cycle. The global economy is just hyper interdependent right now, right? It's like US-China relations, and now this virus affecting financial markets the way it has. If people get excited about something and they decide to buy, since that's the only move they can make, they might have to pull back a little bit later as the next fundamental report comes out about expected GDP, or if they're buying something like the S&P.
Let me take a more generic answer approach to this. So I guess, your question was what's the difference between Ample and Reserve and other monies, and why Ample is better. So let's tie that back to like Ample's vision. So the idea for it to be money usable on different scenarios. One is as Bitcoin, like a long-term store of value, but also being usable kind of like less volatile and usable as transactional money, or what we call like money day to day on the longer term. And the reason why it's well suited for that more than Reserve and I'm not aware of the now one, but let's just use Reserve as an example. Reserve has kind of multiple stakeholders with different agendas. Some people are trying to make profit and some people are just using it. A big part of Ample is that everybody's incentives are aligned. Everybody is on the same token. On gradually, when you get the initial growth, you're gonna get this appreciation in value and fluctuation generally in value. But then over time, as the supply finds its kind of like sweet spot and growth kind of settles down, then we go into the next phase of being used as transactional money. And that's more of like years to come, not months to come. And here where we come to like address the problems that Evan was talking about of the correlation of the economy and money and everything, like with fiat or US dollar expanding, the new supply doesn't go to the stakeholders of US dollar. They go to banks that gives loans that can make some profit from them. But for Ample, you get directly, it gets distributed to the existing stakeholders. So no value is being leaked outside of the Ample holders. I guess I can go more and more on.
Actually,
Yeah, can I just finish my original? Can I just finish my original thought?
Go for it.
Yeah. So yeah, what Ahmed said makes sense too. It's a fair supply policy that doesn't take any seigniorage or demurrage. But if you think of these assets as building blocks, if you think of Bitcoin as a building block and ETH as a building block, they're the base level building blocks, right? And things like Reserve or MakerDAO, they construct a bank on top of those building blocks, and the output of that is another money, right? So there are base level building blocks, which are not themselves banks, like ETH and Bitcoin and Ample. And then there are banks like MakerDAO, right, for which the output is another money. And those aren't primitive level building blocks. And so right now, I think for the ecosystem to grow and thrive, we need a more diverse set of building blocks. And even Bitcoin in its end state can be thought of as a building block, right? So it's not just now versus later. You know, if you've read the Bitcoin standard, which I have disagreements with in general. I mean, that's kind of an end state in which Bitcoin is being used as a collateral asset, not unlike gold under the gold standard. So my view of this is slightly differs from Ahmed's in that I think of a lot of these currencies today as analogous to precious metals, which can serve as building blocks for an alternative financial ecosystem, which could materialize transactional money. And it so happens that each of these building blocks themselves can be a transactional money.
Awesome. So thanks for that. Pretty in-depth answer. I'm going to give us a little extra time because what I would really like to do is kind of rip through some community questions. We've got everyone on the phone here, so let's do that. Great insight on that answer. So Doug, I'm going to hit an unmute for you. And you had a question about accurate market cap.
Yeah, hi, can you hear me?
Yes.
Great, thanks. Good day to the team. I was just looking at Coin, Paprika, CoinGecko, CoinMarketCap.com, and Ampleforth dashboard, and there's a slight discrepancy between the market caps, quite a huge one actually on CoinGecko, that's about 10 million more than all the others. So I was just wondering, where would you guys recommend to look at the market cap to get the most accurate reading on a day-to-day basis?
CoinGecko and the dashboard.
Great. Thank
awesome.
you.
Yeah. Let's go to Luke here with a question which Brandon hit on, but nice to get the specific from you. Just a second. I can ask it. So the question was, can we expect an Ample BTC Geyser?
Ample BTC Geyser. Okay, so the Geyser, the structure is there's two tokens involved. There's what you deposit, and then there's a token that gets distributed. Right. So right now with the Geyser, the pilot, you deposit, swap liquidity tokens, and then Ample will get distributed. So I think what you're asking is, could we incentivize an Ample BTC liquidity market? If that's true, then the way that would work is we would need some sort of market, sort of like Uniswap, where you can trade between Ample and some representation of BTC on Ethereum, where we currently live. And so, in theory, yes, you could do so. right? There's many flavors of BTC on Ethereum. There's WBTC, there's RenBTC, and there's more. So if we wanted to, incentivize or sort of reward, build up that method of liquidity, we could do so. I would prefer to keep a little bit more general though. Most people trade against ETH. And so if you want to trade between Ample and say Rep, it would just hop through two markets, like Ample ETH and then ETH to Rep. Right? So if we had a Ample BTC market, then it wouldn't necessarily connect to all the others, which decreases the overall efficiency of the marketplace. Hope that answers what you're asking.
Yeah.
Yeah, the Geyser in general is built to be general enough with respect to the downstream platform. So it's not tied in any way to Uniswap. All the Geyser knows about is that there's some tokens that get deposited.
Thanks, Brandon. Let's just do one more. This is from Theodore. We went a little bit over, but wanted to make sure some folks got an opportunity to ask questions. We can also filter through this. You guys can ask Telegram questions. We can work to get you some answers. But Theodore, you had a question about a compound interest calculator. I'll unmute you now. I'll ask the question. It didn't work out. So the question is, and it was asked and upvoted a little, can you add a compound interest calculator to the website to calculate coins from rebase percentage?
So I'm happy to answer this one. I'm not a huge fan of compound rebase calculators, actually, as applied to Ample, because I think that's the wrong way to think about it. Most tokens go through a period of what you would call price discovery. Ample goes through process of what you call supply discovery. So what Ample, the protocol, is trying to do is it's trying to move the supply of tokens up to the point that's needed by the underlying marketplace. What it's not doing is it's not giving you a percentage return every single day. I think that's just an unhealthy way to look at the system. Because remember, this system is symmetric both ways. It can increase and it can also decrease. And both of those are healthy things for the system to do. So right now we are because we've had such an influx of new attention and users, there's been a fairly radical shift in the underlying marketplace, which is why we've been in a dynamic period for so long. This dynamic period can only be expected to last until we find some sort of supply level that the market deems is sufficient, right? So I think that's the best way to look at it. If you're thinking in terms of, hey, are we going to get 15% a day for the next 90 days? I think you'll be pointing in the wrong direction. So yeah, I'm not a fan of adding like a compound calculator to the dashboard because I think it would just encourage the wrong way of thinking about the system. Got it.
I'm going to break my rule because a pretty active community member had a question. They asked me to answer it from Solomon. So great work, team. Shout out to Brandon and Evan. Question: Ampleforth's economics works best when it's connected to projects that give it utility. Given this, what is the dream DeFi product the team is pursuing, or any other product you all believe would work best with Ample's current design today?
Dude, Compound would be pretty awesome. And like Brandon said, there's a really interesting thing going on with Balancer and the ability to kind of dynamically adjust weights and how that interplays with Ample's supply policy. But I mean, I think Compound and Aave would be pretty big opportunities for us and wins for us if we could get on those platforms. And in the case of Compound, there'll actually be voting. So, you know, there will come a time when we rally all of you guys and try to get as many people excited as possible about bringing Ample onto Compound, because it would be a fantastic collateral asset there and just quirky in a good way too.
Yeah, I agree. I think a lending platform in DeFi is exactly what we would be hoping for. And there's some specific reasons why too. Not just because they're well-known platforms and we want to be on a well-known platform. I think there's just a really interesting use case for Ample there. So one is what Evan said. It's just a really interesting as a collateral asset because if it is the case that it turns out to have the uncorrelated nature compared to other cryptocurrencies, that it means that your overall collateral basket is going to be less susceptible to the same market forces, right? It's going to reduce some volatility, which is a good thing if you're taking out a loan against it. So as a supplier, I think it's really interesting to do that. And then as a borrower, if you look at the activity on these lending platforms, they're almost all the borrow activity is for stable coins, right? Now, today it might be a little weird because of the incentives going on with the compound governance tokens and that sort of thing. That saw some crazy behavior, but in general, like people want to borrow stable coins because they know exactly what they're going to be on the hook for, right? If I borrow 100 Tether, I know that I'm only going to have to repay 100 Tether plus some interest. If I borrow ETH and ETH doubles in value, I might have to repay twice what I thought I was going to, which could lead to some liquidations or defaults, right? So on Ample, on the borrow side, it borrows a lot like a stable coin. If I borrow 10 Amples, no matter what happens to the supply of Ample, I'm always going to have to repay 10 Amples, roughly 10, 2019 US dollars, plus some interest. So I think this is the first sort of, money-like asset that is interesting for borrowers as well.
Yeah, I think if I could sum it up real quick, there are unique properties of Ample that have unique kind of synergies with all the DeFi platforms, or all the major ones anyways. So in the case of Maker, for example, diversified decentralized collateral asset, right? So it showcases the importance of a unique movement pattern and decoupling from existing digital currencies. That's important to them from a collateral asset perspective. For Balancer, it showcases the uniqueness of the supply policy, the supply adjustments, and the ability to offset those supply adjustments with Balancer weight adjustments, and the output of that potentially removing impermanent loss or making impermanent loss truly impermanent. That's a unique kind of synergy there. And like what Brandon said with Compound, we really showcase the unit of account synergy there, right? Because I now can borrow against an asset that might be, on the rise, but I know that the debt denomination is in an Ample, and I know that an Ample will eventually return to $1. So, I can borrow it and return an expectable amount, which really showcases Ample's unit of account properties. And so across all of these platforms, Ample delivers unique value because it's actually just a unique asset. Like one of the reasons why we have such a hard time getting coin market cap to get our metrics right is because it's different from all the coins. And I think different is really better. It's like, again, if you think about range and domain in terms of composability, well, we've extended the range, and as a result, we can extend the domain of what can be composed with these systems. So there are really, really unique synergies across all of these platforms. And God knows how many more that we haven't imagined.
Awesome. Hey, thanks everybody for joining. We've got to go. We appreciate it. We look forward to engaging with you guys all some more. We're going to make this recording available. And if you have good questions, don't let them go to waste. You can always get them to us. We'll work to answer them all. And hopefully we can get you featured on the next time we do this. So thanks again. You guys have been a phenomenal community. We love to see the growth and appreciate your time.
See you.
Thanks, guys.